So let's have a look at semiconductor industry. It is like very well known industry, and I presume everyone knows company Intel. What I'd like to tell you first of all, that it's very high level of competition, and especially among big industry players. The guys like IT guys, they probably know all these companies, and you can see like we are going to discuss those companies a bit further, but they're trying to compete for bigger contracts. And the new company from different industries are coming. For example, Apple just recently announced that they're going to enter into the semiconductor industry. They're going to manufacture their own chips. And of course, they're creating a competition even higher on that particular level. Now, this particular industry has a very direct correlation with the financial performance of other industries related to that, because if the economy goes down, a lot of businesses, they don't kind of improve their IT infrastructure. They don't buy new computers, they don't buy data centers, they don't buy some kind of upgrades, etc., etc., etc. And as a result, the sales in these companies, they're also dropping down, and they are affected. And because a lot of them, they compete on a price level, they can become unprofitable very, very quickly. Another thing which is kind of very common to this industry is that they spend a lot of money in order to improve their IT like development, research and development. The Intel, we're going to look at this further, but spends about 18% of their profit for development of new technology. And if the company falls apart, behind, so it means that they can lose the clients very, very quickly. For example, the fall which happened right now for Intel, that's why I took it, it was not because the company performed badly. It's actually performed pretty well, but because they gave bad projections, and the major reason for this particular fall that they delayed the new product, which we were planning to announce in October, and now they're announcing a bit later in the year. So, and that affected the price of the company quite a lot. So if also another thing which I noticed, that some companies, smaller companies, even bigger companies, if they have only one particular niche in this industry, they don't have many products which they deal with, what can happen that they can lose profit pretty quickly. So if they stay behind, for example, Micron, I remember we looked at this industry several years back. What happened with Micron, that if you look for the last 15 years, from I remember at least from 2015, if you look for the last 15 years at that time, you would see that about 8 years they have losses, and 7 years they have profit. So it's like 1 year they make money, another year they don't make money. So they constantly change their business performance, and that company doesn't pay dividends, that company didn't pay, like their balance sheet is not improving as well, and of course it's not good for us as investors. And Micron is one of the biggest companies in this industry. So when we talk about small companies, which valuation would be about $500 million or like up to 1 billion, they would be pretty tricky in this particular case, because the big player can move them out. If they lose one contract, that's it, they practically lose their business. So you have to be really careful with this particular industry. During last 8 years, we've analyzed and we touched only 3 times. Okay, one was about 5 years ago, we found the company, and then we looked at this 2 years ago, and now the 3rd time, because majority of time the companies in this industry rather not so good quality. Okay, so they can be very, very tricky, like as example with Micron, or good company, they could be quite overvalued and expensive. Okay, so it's very difficult to find both good quality and at the same time undervalued company. All right, now during last few years, this particular industry grew quite a lot as well, based on a World Semiconductor Trade Statistics. They showed about 12% in growth in the industry in general. So some companies didn't grow, some companies grew a bit more, but generally it was about 12% annually. Now, due to coronavirus pandemic, it was affected quite a lot because, first of all, some of companies included in this industry, they had to stop their factories completely because of the pandemic. Like there was a regulation. So of course, the supply chain was disturbed, and a lot of delays in product happened. And only the companies with good automation systems, with a kind of good policies and procedures where it could prevent the spread of coronavirus, and they managed to continue the supply, okay, but still they were affected. From another point, due to new kind of working from home trend, demand for new infrastructure, data centers, software grew quite a lot. And as a result, the demand for semiconductor products, I mean, for products from this industry grew quite a lot as well. And companies which could manage this, this time, they increased their margins, they increased their sales level, and actually made more money. Okay, this is kind of very important. Now, and as I said, the ability to see ahead and be able to change their product mix based on new trends is a major condition to success among these companies. So it is very, very important. Now, if we go to value line, we will see, and if you read value line industry analysis, so you will see that Taiwan Semiconductors here, NVIDIA, Intel is the third biggest company here, then AMD, and then Micron, we can see it's one of the biggest. And then we can see quite a lot of companies here as well, the small ones. Now, what I did, again, I went to value line screener, and what I've done only two parameters I put. I just wanted to check it. First, I chose the semiconductor industry. There was 84 companies there. And the second thing what I did, I put P ratio from like 0.5 to 99. That was the maximum. So basically what I've done here, I chose only profitable companies, the companies which make money here, okay? And look at this. Out of 84 companies, only 33 companies, they are making money. Now, just a second, guys. I want to check that we're recording. Okay, we're recording because I thought maybe we forgot to record. So you understand how important is it. That's what makes this particular industry quite dangerous to invest to, because the companies, quite a lot of companies can be unprofitable. It's one thing. Secondly, look at this. This is P ratio. What I've done, I kind of put in the order of P ratio level, and we can see that only 4 companies below 15. Okay, one extra is 15. The rest of them is quite pricey. So it means that these companies are overvalued, or their earnings dropped quite a lot during recent time, and as a result, their P ratio grew. Okay. The second thing what I've done, I went to FinViz, and also I've done the screener. So what I did, I just put a couple parameters there. I've actually 4 parameters only in total I've done. Again, it was quite a lot of companies. In FinViz, I believe it was even more companies in this industry. Remember that each particular platform like that, FinViz or Value Line or Morningstar, they might include different companies into the same industry. Okay, so because some companies, they have different products, it can be allocated to different industry. So that was exactly the same with FinViz. And what I've done, I put the P ratio under 20. There was an option to put under 15. And then I put, I think, optionable, that the company has to be optionable, it has to pay dividends and something else. So put 4 parameters, and as a result, only 6 companies left. Okay, and IMOS, ChipMOS Technologies, has PE 9, and Intel Corporation has PE price earning ratio 9. Okay, so quite close. But when you see the difference in trading volume, look at this. IMOS is 16,000, Intel 19 million. So it's quite a huge difference, right, in trading. So you probably understand that it's practically impossible to trade the first company, and the rest of them PE goes from 15 and above. And also what I've noticed, majority of them, they're not US based. Only 2 companies USA based, Intel Corporation and Power Integration. I put there 2. What you can do, you can also do exactly the same. So you can, just a second, I hide the video. What you can do, you can look at this like that about performance of the company and compare, like Intel P ratio 9, forward P ratio 10. So FinViz believes that, at least analytics here believe that the earnings going to grow, going to go down during next year, about 10%. All right, and if we look at this particular company, so we'll see that pricing ratio is 17. So it's twice as high as here. All right, and forward PE is 35. So it means that the earnings are going to drop nearly half, like 2 times from the current levels. Okay, so it is very important to see, out of all these companies in semiconductor industry, only Intel is worth looking at it right now. So that's why I chose Intel for this presentation, and we're going to discuss it with you and look at those fundamentals. Okay, this is industry. Can you please, guys, put from 0 to 10 how you understand the semiconductor industry? If you can add something, I'd be happy to give you a microphone and you can tell something. If you're an expert, just let me know. Okay, because I know we have some guys from IT industry here, so who understand it pretty well. All right, so this is actually the drop. You can see the Intel went from 60, nearly $2, dropped to 55, and then went down to 47 was the lowest one. Okay, this drop in March was until $44. 44 was something there, the lowest one, and then it bounced pretty quickly. Okay, back.